Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for June 20th, 2021. We will be going through our usual agenda. I'll look at the prior week's results, our currency strength meter, fundamental announcements, look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with the ledgers, this was a serious retracement week as the dollar moved into strength after some Fed statements and ended the week at a very, very strong retrace against most of the other currencies. So we did give back pretty much all the profit we had accrued. This is a temporary setback. I don't think the dollar is going to be moving into strength full time. I expect a retracement back into dollar weakness. But if it does continue moving into strength, well, we will start trading it in that direction. The kicker for us is going to be what the market does today when it opens, and we'll see which way we need to start trading. The first few hours of the market are going to be critical this week. But either way, this is real trading. This is what happens when you trade. It does not go in one direction every single time. So we did get taken out of a slew of dollar trades as well as a few pound trades at a deficit throughout the week on the long-term account. None of them were any serious loss. Our risk control is stellar. It's working great. The problem was that the collective risk did turn around and bite us. So we got taken out of many, many trades at a loss, and they add up. But again, we will be trading them back in whatever direction the market is running. And we're pretty confident we'll go back to where we were and then some in the near future. Same thing happened to the intermediate term ledger. We did get taken out of multiple trades at a loss. We still have trades open on this account as well as the long term that are starting to move in our direction. So some of that loss is simply realized losses, while we still have open trades that have not taken the profit they are starting to accrue. So stay tuned for that. There will be a comeback in both of these accounts. And last but not least, the short-term account was the least hit. It was a very small drawdown measured in just a handful of dollars between where we were before and where we are now. And we did have some winners to crow about. We finished the week all cash, taking off the one winning position at the very end of the week. And again, we'll be looking for opportunities to trade any dollar move as the week begins. Notes and opportunities for improvement. As mentioned, massive retracement on the dollar pairs into strength after the Fed announcements. The pound also did a not as significant, but still a pretty deep retrace into pound weakness. Neither one of them looks like a reversal yet, but the jury is still out. So we will be monitoring the market very closely to see what guidance we can get from that. Relative strength meter for the week. This is under construction at this point. I'm not happy with the options that I had taken from other analysis sites. I'm going to end up building my own strength meter. So I'm going to try to have something ready for next week, if not the week after, but it is coming. So under construction for the time being. I'm getting tired of trying to find a decent one. They work for a couple of weeks and then they either change them or they stop working. Not sure what's going on with some of these other providers, but again, try not to depend on anyone or anything other than yourselves. And I'm going to take that lesson to heart and build my own strength meter very shortly. Fundamental announcements for the week. We have, as I mentioned, we have more Fed announcements on Tuesday at 2 p.m. Fed Chair Powell is going to be testifying. I'm going to guess that's before the House or before the Senate. Either way, it will be C-SPAN. It's not something we're going to be trading live, though it does mesh with our 2 p.m. trading session. But just for awareness purposes, be aware that this is happening. If we are going to see a continuation of dollar strength, this is where it's going to start, Tuesday at 2 p.m. On Thursday, we have the Bank of England's interest rate decision coming out very early in the morning. So we will be getting up for that and seeing what, if anything, can be traded. I don't think there's going to be any surprises with the interest rate decision, but rather the monetary policy and the Bank of England minutes coming out at the same time will have the potential to move the market. So that is it for the calendar for the week. So really, the only thing that we're going to be actively trading is the Bank of England's announcements on Thursday early morning. The Fed testifying is more informational purposes, though we will be live at that time. And as I said, it does have the potential to either make or break the dollar for the remainder of the week. With that, we move into the charts. Commodities, look at that beautiful trend that oil is in right now. We're getting higher highs every week for the past month at least, and this one was no exception. Nicely above $70 for the first time in the year that the chart covers. To go any higher, we would need to go back to pre-pandemic, so prior to March of last year, to see anything higher than those $70. And even then was much higher. So we are in a little bit of an oil boom. You will see gasoline prices rising steadily as they have been for months now. But more importantly, the Canadian economy is closely correlated with oil. So you should expect the CAD to continue moving into strength, or at least holding on to its most recent gains. Euro dollar, and here you start seeing the massive retrace that the dollar made Wednesday into Friday, just an absolute rout against all the other currencies, breaking multiple levels of support in one go. We did not get a whole lot of love out of the dollar pairs, so towards the end of the week, we did start trading them in the direction of dollar strength and did recover some of what we had given up. Not enough, however. But we will be looking at opportunities primarily to trade it back up, because I think fundamentally that's where it's going to be headed, moving the euro dollar up again into dollar weakness, but we shall see. And again, be very careful with Tuesday's Fed Powell testimony against in Congress. So not much to say other than look at that huge move, and we'll be very strongly monitoring to see which way the market's going to be headed, both near term and longer term. Pound dollar, same thing, dropping all the way to the next level of support. And as with the other ones, I'm very eager to see which way it's going to bounce as the week begins. USDJPY, not a huge rout. Indeed, it moved into dollar strength on Wednesday, but Thursday it retraced almost, but not quite back to where it had started. And then on Friday, there wasn't much of a move, or rather there was a move in both directions, but ultimately no net change. This is a very positive development, even though it has not broken the trend line yet. We do see that the upward pressure simply is not there. Even in a week where the dollar's shown, the USDJPY did not move, barely moved. USD Canadian, one of the harder hit ones, and one of the pairs I think is good for a trade back in the original direction. It did break trend lines, no denying that, but we have oil prices rising, and I think this week we may be in for retracements back towards dollar weakness. So USDCAD is a prime candidate to trade it in that direction, because the CAD is already strong on its own. USD Swiss, another one breaking levels of resistance and going back to highs not seen since early March of this year. Yet another one, I think, we're going to have the opportunity to trade back down. However, if it does start breaking resistance at the 93 level, then all bets are off. I would not be averse to trading it in the other direction if that happens. Aussie dollar, and I had already expected Aussie weakness, so this one isn't as surprising, but still, it's the same part of the dollar move, moving into dollar strength Wednesday into Friday. This one is probably not going to be my preferred trade, even if it does start going in the opposite direction, simply because I think the Aussie is played out. Kiwi dollar, this one does have more opportunities to trade it back up, as I still believe that the Kiwi has strength behind it. And if the dollar starts moving back into weakness, this one will come back with a vengeance, giving us an opportunity for at least 300 pips quite easily and in a very short period of time. That's it for the dollar pairs. Aussie CAD slowly coming back down. Most of the week it was either flat or dropping, and it ended the week significantly lower than where it began. Euro Swiss moving up now. We made some bank on that movement, getting out at almost the top on Friday on the short-term account. So that was a nice little bit of recovery from some of the losing trades. We ended the week pretty flat on the short-term account, thanks to the Euro Swiss. Euro pound bouncing off of support on Friday, made a significant move back up, so it's still sideways and support did hold. EURJPY breaking down into the next and outer level of trendline support. We took profit on a EURJPY trade early in the week when that retrace started. And again, I wouldn't be surprised to see this one attack the top again. Euro Canadian, very flat at the bottom. It is trapped within two very close horizontal support resistance, and we're waiting for it to break in either direction. I think that, and I've been saying this for a while, I think it will return at least to the middle of the chart, somewhere within the boundaries of those two blue lines, that channel that it broke out of quite a while back, tested, retreated, and I think there is either going to be another test or a break into that channel in the very near future. Pound JPY dropping all the way to outer support, and another one I think is a good trade up. Though the yen has been gaining strength, there's no denying so has the pound. The pound had a bit of a stumble last week for multiple reasons, but I don't think it's going to be a long-lived one. Aussie JPY, and this one we were trading, or we are trading. We have an open trade and it's carrying some nice profit now. We've been expecting that break of support for quite a while. It's retreating from the top. I've said it before, the Aussie is overdue for weakness, and the yen, well, the yen needs to come back. It's overdue for strength. Euro New Zealand moving up, up, up. We either have an open trade or we took profit on one at some point. I forget, but either way, this one is starting to look like a potential breakout. It certainly cleared all the previous highs of the last few months. The last time it was higher was back in December of last year. So we're looking at a potential break towards the top at any moment. Pound Canadian, very slowly, gradually moving back up, and this happened throughout the week. So this was one of the few pound pairs that worked in the pound's favor. No retreat, and it's certainly slow, but it is moving. Pound Swiss went in all directions last week, ultimately ending flat. And pound Aussie is the other exception to the pound weakness we saw last week, and this was mostly Australian weakness. It made a good run for the top. I think we either took profit or we have an open trade on the pound Aussie as well, attempting to trade it up. So we'll see how much that gives us. It was a third or fourth entry into the pound Aussie, so we're not as profitable because we already took profit off the table in prior weeks, but we were at profit as the week closed. That is it for our charts. Setups we see in progress. We've got the pound pairs, as I mentioned, they had a bit of a rough week, but our assessment remains the same, pound strength. The dollar, a significant retrace. We've said it. We've beat that dead horse quite a bit, and we'll continue beating it for the rest of the session. You saw the breakouts that happened on the dollar pairs on most of them, exception being the USDJPY. But we still don't think this changes the broader fundamentals of the US dollar, and we still expect weakness in the longer term. The Australian is starting to show weakness across multiple crosses, chiefly the pound and the JPY. The rest may soon follow. This is an expected reversal or at least an extended sideways period trending into bearishness. The yen at last had a decent week, moving stronger against multiple currencies. And even where it didn't, like the USDJPY, as we saw in the chart, it did not weaken too much, even with that strong dollar comeback. And the Canadian pairs, of course, the Canadian is maintaining the recent strength play almost across the board. Again, a few exceptions like the pound. And of course, it did suffer against the dollar last week, but I think that is giving us one of the better opportunities in the market as the week begins. And that brings us to our concluding words: retrace versus reversal. What is the difference? Obviously, the dollar did an incredible turnaround last week on the back of those Fed statements. But there's a huge difference between a sentiment-driven retracement, which is usually temporary, and a true reversal, which is a longer-term move. A reversal is the end of a prior trend and the establishment of a new one in the opposite direction. We think what happened with the dollar last week was the former. It was a temporary retracement. And in fact, the dollar pairs may give us incredible opportunities this week and in coming weeks to trade them back in the direction they were going. That said, caution should be exercised. It always should be in trading. But when stuff like this happens, even more caution needs to be there. Because, for one, there are more Fed announcements scheduled for the week, as we saw in the calendar, plus all reversals, the longer-term moves, all of them start as retracements. There is no way of knowing if it was a retracement or a reversal until we're neck deep into it. The only way to really tell which is through the genius of hindsight. After things happen, any idiot can explain them and say why they had to happen. Don't let yourself be fooled. This is being fooled by randomness. There is no way. If it were that easy to say that this had to happen, then, why didn't they know about it before the fact? Hindsight is the only thing that is always 20/20. And a few people in the Air Force who are required to have 20/20 in order to fly airplanes, blah, blah, blah. But in the market, the only thing that is 20/20 is hindsight. Don't forget that. Don't get cocky. Don't get scared. Just do what you need to do. That's going to be it for me this session. So we will be coming back at some point tomorrow. I'll be sending the schedule out as soon as I can. Any comments or questions? Okay, folks, thank you very much. See you tomorrow. Bye-bye. What?